This evening, the stock market had a good day today. Oil prices pulled back sharply. But despite the Dow hitting a 3-month high, more and more analysts are cautioning that a recession could be just around the corner. Joining us now to debate the issue, recession or not, we're going to be joined by Art Laffer. He's Chief Investment Officer of Laffer Investments and former economic advisor to President Reagan. And Peter Schiff, he's president of Euro Pacific Capital. Gentlemen, thanks for being here. Peter, I want to start with you. Although there are more and more people saying that the U.S. economy will be in a recession next year, it is still a minority position. Why do you think that a recession is coming, and just how bad is it going to be?
I think it's going to be pretty bad, and whether it starts in 07 or 8, I think is immaterial. And I also think it's going to last not just for quarters, but for years.
Art Laffer, you hear him? He says the consumer is going to slow down in order to rebuild the savings. And you know that 2/3 of the American economy is driven by the consumer. Do you believe that?
No, I don't believe any of it whatsoever, Michelle. Excuse me. But, you know, what he's saying is that savings is way down in this country, but wealth has risen dramatically. The United States economy has never been better shape. There is no tax increase coming in the next couple of years. Monetary policy is spectacular. We have freer trade than ever before. And not only that, but there are no incomes policies things here. I think Peter's just totally off base, and I don't think it's going to be, I just don't know where he's getting his stuff.
The two government-sponsored mortgage finance giants tumbled again today on concerns about the company's financial health. The two are the biggest buyers of home loans, and the worry in Washington is if the companies go down, the entire economy could go down with them.
Lehman Brothers says it plans to file for Chapter 11 bankruptcy protection. That sent Asian markets tumbling and U.S. stock index futures down sharply.
Is solely for the strength and the recovery of the U.S. economy. I believe if the credit markets are not functioning, that jobs will be lost, the unemployment rate will rise, more houses will be foreclosed upon, GDP will contract, that the economy will just not be able to recover in a normal, healthy way, no matter what other policies are taken. I therefore think this is a precondition for a good, healthy recovery by our economy. These institutions provide credit for homeowners, they provide credit for businesses that create jobs. It's about the people who need those services and that credit. It's about people retiring who need to have assurances about the value of their investments and their assets. Again, I think if this is not done, that it will be of significant adverse consequences for the average person in the United States.
That's your recommendation, Chairman.
Yes, sir, it is. And I do believe we need to act to stabilize the situation, which is continuing to be very unpredictable and very worrisome.
Treasury Secretary Paulson and Fed Chairman Bernanke faced tough questioning on the bailout from the House Finance Committee last week. Some of the toughest questioning coming from Congressman Brad Sherman of California, one of the bailout's biggest opponents. Congressman Sherman joins us now from Capitol Hill. Congressman, good to have you with us. But what is the basis of your opposition to this bill? I mean, we've heard from the Democratic leadership it's just boffo. We've heard from the White House that it's just boffo. What's the problem?
I'd like to see a bill that I could support. This bill has three major problems. The first is that Paulson gets the $700 billion, goes up to Wall Street, and gets to hand it out to whomever he wants for whatever toxic assets they choose to sell without any control. Now, the White House will agree that he will be subject to a control board, but made up exclusively of Bush cronies. They'll be the only ones that can tell him to stop. There'll also be a review board, but that one just issues press releases. It can't stop anything.
The American people will revolt. I mean, who are these people? Who is Henry Paulson? Who is your leadership, Nancy Pelosi and Harry Reid, that they would accommodate this kind of nonsense?
They're reacting to the big fear machine that is saying the markets will drop,
is
the sky
anybody
will fall.
Afraid of the culture of excess and greed and absolute indifference to the welfare of this nation, the national interest that's been created on Wall Street and in corporate America? Is anybody afraid of that culture?
They're more afraid of voters getting mad if the market drops tomorrow. And now Wall Street there'll be a few on Wall Street who will realize that the way to scare Congress again is to make sure the market drops precipitously tomorrow, and then they can say, look, we noticed that the deal isn't going through quickly, and look what happens to the market. You guys have to go in on Saturday and pass the deal the way you want it.
Wall Street watched Washington with shock and fear.
Nobody could believe it.
As the bailout package went down on Capitol Hill, the Dow went down like a sub.
The fact that it didn't get done is, I think, just kind of mind-boggling.
A history-making 777-point nosedive. The NASDAQ plunged almost 10%.
Wall Street's of the view that something needs to be done, and I think most investors are of the view that something needs to be done, and it didn't get done.
The financial crisis, meanwhile, continued to spread. Wachovia, burdened with bad mortgage loans, averted disaster by selling out to Citigroup. Cleveland-based National City, hit by fears it could be the next victim, saw its stock plunge more than 60% today. Overseas, they also felt the reverberations. The British government had to seize a distressed mortgage bank, while the Belgian-Dutch bank Fortis was rescued in a $16 billion bailout.
The clock is ticking, and we need to see some relief very rapidly.
Economist Mark Zandi says the credit markets are still frozen, and Main Street could feel the effects within weeks.
If they don't get relief from their bankers soon, meaning in the next few days, couple of weeks, they will be laying off workers and shutting operations.
Among 160 companies in danger of defaulting over the next 12 months, according to Standard & Poor's, are United Airlines parent UAL, General Motors, Six Flags, and Trump Entertainment Resorts.
So as bad as the stock market was today, what's really worrying Wall Street are the credit markets. If they don't get help soon, it could be only a matter of weeks before this financial crisis moves from here on Wall Street to Main Street.